Hello traders, you are welcome back to the Forex Geek channel. In this video, we are diving into a powerful combination that will help you improve your trade setups. We are going to be specifically looking at the ATR and EMA strategy. Okay, so let me just add the ATR indicator to the chart, the average true range. Okay, I'm going to be adding the EMA to the chart. Okay, we just set this to the 50. All right. So if you've ever been stopped out too early or struggled to set the right stop loss, this strategy will change the way you trade. Watch till the end because I'll be sharing some examples and key trading tips. Now, the ATR and EMA strategy combines two powerful indicators. The 50 EMA helps us identify the trend direction. The ATR indicator measures market volatility, allowing us to place smarter stop losses. Using both together helps us avoid false signals, manage risk, and time our trades better. Now, let us just break down this strategy step by step. The first step is to identify the market trend with the EMA. All right. First of all, we determine whether the market is in an uptrend or a downtrend using the 50 EMA. Okay. If the price is above the 50 EMA, we only look for buy trades. All right. Only look for buy trades if the price is above the 50 EMA. Meanwhile, if the price is below the 50 EMA, we only look for sell trades. This ensures we are trading in the direction of the dominant trend. Okay. The second step is to check volatility with the ATR. The ATR indicator, the default setting is 14, so we can use the default settings. It helps us to gauge market volatility. A high ATR means the market is more volatile. So at this point, we actually had a high level of volatility because the ATR indicated it. All right, so in that case, we need a wider stop loss. So when there is high volatility, we need a wider stop loss. Then or a low ATR, where you have a low ATR, you can see around here that we had this volatility. All right. Then a low ATR means that price moves are smaller, means a tighter stop loss is possible. So around here you can see that we actually had slower moves here. So in this case, tighter stop losses are possible. So this prevents us from using stop losses that are either too close or too wide. The third step is to wait for a pullback to the EMA. All right. Instead of chasing price, we wait for a retracement back to the 50 EMA. This gives us a better entry point with reduced risk. Okay. For example, in this particular sell opportunity, as price dropped below the EMA, we wait for price to pull back, we enter a sell. Because this was a low volatility period, we could have considered using a tight stop loss. So you can set a stop loss just right above the moving average, and then our take profit can be around key support zones. So this was a good one. All right. A common mistake traders make is placing their stop losses too close when volatility is high. That's the reason why you should pay attention to the ATR indicator. If the ATR indicator is showing that there is high volatility, you should widen your stop loss a bit, because volatility means that price can be so erratic, and if your stop loss is too tight, price can hit your stop loss and continue back in your direction. Okay, but if the volatility is low, then tight stop loss is possible. All right. Now, ensure that you always confirm your entries. Once price pulls back to the 50 EMA and the ATR confirms healthy volatility, you can take the trade. Make sure to wait for additional confirmation. You can also look at candlestick patterns, chart patterns. All right, make sure to wait for confirmations such as rejection candles, or maybe bearish or bullish engulfing patterns, and so on and so forth. And ensure that you use stop losses and take profits. For take profit, you can use key support and resistance levels. Support levels for sales, for sell trade, resistance level for buy trades. All right? It's a buy trade, resistance level. Stop loss below the previous swing low, take the profit around resistance. Okay? Now, here are some extra tips to make this strategy even more effective. Trade only in trending markets. When the market is trending, you can look for good opportunities. If it's a buy trend, just look for buy opportunities. Watch out for when price pulls back to the EMA. Then you look for bullish candlestick pattern and time your entries. Here again, look at time your entries. Set stop loss below the previous swing low. Target resistance zones for your take profit. If it's a sell trade, once price pulls back to the EMA, you look for sell opportunity after you get a bearish candlestick pattern. Get a bearish candlestick pattern, you enter your sell. Stop loss above the previous swing high. Take profit around support zones. So it's important to trade only in trending markets. Avoid sideways conditions. You can see sideways conditions such as this. You can see this was a sideways market. So avoid trading during sideways market. Just focus on trending markets. You can see we had another sideways market around here. But this is a trending market. You can see we had another sideways market around here. So when you have a sideways market, just stay out, okay? Look for high probability trades in trending markets and then use higher time frames. You can use the 1 hour charts, 4 hour charts, or even the daily charts to do your analysis, all right? Because they provide more reliable signals. And you can adjust your stop loss based on the ATR. If the ATR increases, you should give your trade more room, all right? Combined with price action as well, candlestick patterns can enhance your entries. So if you are looking for buy opportunities in a bullish trend, look for bullish candlestick patterns. If you're looking for sell opportunities in a bearish trend, look for bearish candlestick patterns. It is very important. To increase your chances of success, you should get confirmation patterns, confirmation candles, confirmation, signals. All right. And that is how you trade with the ATR and EMA strategy. This method helps you ride trends while managing risks like a pro. If you found this video helpful, don't forget to like and subscribe for more high quality trading strategies. Let me know in the comments if you have any questions or what strategy you want to see next. Thank you for watching, and I look forward to seeing you in the next video. Happy trading.